I take a short break from YouTube and I'm seeing everybody talking about how they've been getting cooked these past like 2 months. I can't relate. Imagine, you know what's funny? There's so many people on YouTube calling themselves self-employed, yet trying to blame somebody else for their failures. Roll the intro. What is good, YouTube? It is your boy Sean, known online as Sensei Trades, back again for another video. Welcome back to another episode of TikTok, where I talk about everything trading, Forex, futures, stocks, crypto, wink, wink, and we just get straight to the bag. Now, who am I? Well, I am a 7-year experienced day trader and I have been pulling life-changing amounts of money from the Forex and futures markets. Ignore my wall for a second. Those are just heads of my enemies back there. I have been doing this once again for 7 years. It took me 2 years to get profitable. So I will be the first to tell you that trading is not some get rich quick scheme. I'm not here to sell you a dream. I'm not here to sell you no course, sell no mentorships, none of that, right? I am here to just give you the information, drop some gems on you so you can know how to trade in a simple yet effective manner like myself. Now, let's get on to the fun stuff. Using my trading approach that I like to call SKC, Structured Candle Corrections, yes, the candle is spelled with a K, leave me alone, I have been able to earn another $325,000 worth of prop firm funding. Now, I know some of y'all are still on your journey to just pass one, and that's why I'm here. I am here to show each and every one of you how I do it every freaking day. Now, in previous videos, you may have seen that I use support and resistance as my base. That is no longer the case, bars. I now use supply and demand as my base. Why supply and demand and not support and resistance? I'll tell you. Support and resistance is guesswork. You don't know which level is the right level to use. And we'll go even deeper down that rabbit hole once we hit the charts. But we're just gonna keep it simple right now while y'all don't have no visuals. So now let's go back into history. Let's go back to the beginning of time before paper money was even thought about. Back when cows, sheep, and goats were used as your currency. If there was a demand for goats, and you were the only one with goats, obviously your stock is going to eventually get bought up. So you need to compensate for that by selling your goats at a more premium price. If you've heard smart money before, this is all going to make sense to you. If not, don't even worry about smart money. We don't do that here. So now, say there is less of a demand for goats, you are able to now sell those said goats at a discount. And the problem with support and resistance is that you may be setting yourself up for one move when in reality, the market is trying to do the other. It would be disingenuous of me to sit here and act like the markets is nothing but lines and boxes on a chart moving up and down. There's more to it than that. What the charts are, what the candlesticks are, is representations of millions of buyers and sellers transacting against one another. That candle is either going to close bullish or bearish, depending on who was more in control at that moment in time. Support and resistance can't help you with that, but supply and demand can. Supply and demand is backed by decades and decades, and like I said, backed by history as well, of testing, of results, of everything you may need to basically put your faith in supply and demand. Now, while in theory, everything in trading can work, some of y'all need some kind of direction when it comes to your trading approach, and that's why I'm here. So I'm not going to keep yapping y'all heads off without pulling a chart up. So let's get straight to it. All right, so here we are on GBP USD futures. Now, I like to look at some Forex pairs. There's really only 3, Euro USD, AUD USD, GBP USD, in their futures counterpart, just because this is the true GBP USD. The data is provided to you by the CME, Chicago Mercantile Exchange. I probably botched that, but whatever. So I want you to pay attention to this area right here. We're going to stay within this box. Let me show you why support and resistance would have failed you. But first, I got to explain what premium versus discount looks like on the charts. So you're going to take your Fibonacci tool and you're going to make it look like this. 0 level, 0.5 level, and then the 1 level, or 100%. Anything above the 50% or the 0.5 would be your premium zones. Whereas underneath it would be your discounted zone. So wherever the market is located within one of these two areas would be what you would need to do for that moment. You would either need to buy it in discount or sell it in premium. So I'll keep that right there while I explain the downfall of support and resistance. So now let's go back to the box. Let's say you was looking for that support and resistance area right there. Let's count all the touches for it. If the zone started here, you got 1, 2, 3, 4, 5. You got 5 or more if you want to count all the extra ones in there. You got 5 different touches within this zone. So now let's say, for example, there was about $10 million worth of orders sitting at this zone right here. Each tap would have taken $2 million worth of orders every time price tapped this zone. So, meaning each tap took away volume, took away strength at this level, meaning there is nothing here for you to work off of because it has all been taken. So there's no wonder to why price blasted straight through after a while. So now if you was looking for sells for a 1 to 2, right, it would have been over for you. But now once again, because there's no volume, even if you tried to take the retest here for buys, you would have had your stop naturally right underneath the level. That would have been taken too. So now let's say in theory you was looking for the top of this box. Again, looking for a 1 to 2. You would have been stopped out right before it would have launched in your direction. This happens way too many times trading support and resistance. Trust me, this is my main approach for years. Now, of course, I made it work just because I'm built different. But now you can even do it for the support side of things. So first, let's clean up shop. Say you was looking for the support level. So you try to grab as many touches as you can and you stretch it out. Once again, let's count the touches. The zone started here. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 different touches at this support and resistance zone. So now, let's just imagine there was 10. Let's just add a 10, right? Just for the sake of conversation, right? We don't know exactly how many orders was at this level, but just so you can understand what I'm trying to tell you. If we had another $10 million worth of orders at this zone, and each tap took $1 million from it, there's still no volume here. So even if you took the buy, oops, there's no wonder why, if you was looking for the 1 to 2, you got stopped out to the tick right before price launched in your direction. This is where premium versus discount comes in, and this is where supply and demand will reign supreme. Come on. There we go. Right, so this is how I want you to look at the charts. I want you to look at it as what in between what two prices was price playing in between. And I'm talking about the highest and lowest prices. So you have your lowest price down here, and then you have your highest price up here. So now, as you see, when price created this major low, major high, swing low, swing high, structure low, structure high, it doesn't matter what you call it, as long as price played in between two prices, right? These are the two prices that you're going to be working off of. And that is where you're going to draw your premium versus your discount. So you're going to start at the low, just because we're in an uptrend, right? You're going to start from the low and take it to the high. So as you see, we are properly lined up. So now you should have immediately seen a shift in your perspective when I did that. Trying to take this support and resistance level, you are already in a premium price area. Price is too expensive to be trying to look for buys right now. It's like you go into the store. You're not going to go buy a bag of chips for $10. And if you do, what kind of chips you get, right? You're going to wait till them chips is $2, $3 if it's a family size, right? But even if you use the support area, it's on the 0.5 level. This means we are in equilibrium. So we are undecided. We don't know what price is trying to do. People are indecisive on where they want to transact at. Remember, the market is millions of traders transacting back and forth with each other. So you got to think invincible. You got to think like a consumer. You're not going to buy the bag of chips for $10. You're going to wait for those chips to come at a discount. So you're going to wait until price gets within this zone, and that is where supply and demand reign supreme. So from the same low to high, right? Boom. Look at that. Let me set it all up for you so I can explain. There we go. Sorry, I'm a little perfectionist. So now, what happened here? Well, I'll tell you. Price looked for fair value, not a fair value gap. Okay? Again, there's no proof that that is a factual trading method You feel me? Now, again, in theory, everything can work, but I go off of factual information and not guesswork within some candles. Supply and demand is not guesswork. You're only going to have one supply level. You're only going to have one demand level depending on the trend. So now fair value, peep game. Fair value is usually located 68% after a peak high or low was made. So if I do the values up here for you, not prices, well, we could put the prices too. Our 0.68 level, our fair value price was located at 1.2767. This is the price that we want to be looking for. And look at where price was located. Underneath the 0.5 level in our discounted area. So as you see, the moment all these conditions were met, so we have a peak low and a peak high. This peak high was made in the market because if you follow structure, right? Step 1 of SKC, structure. Price broke these previous highs right here. So in the grand scheme, it looks like this. Following me? Good. So because price previously broke highs, we can determine that we are going in an uptrend. Don't even worry about these lows being broken down here because once again, we are in an uptrend. So you draw your fib from that low to that peak high. And that is how you will find your fair value price. And the moment all of those conditions was met, put your stops underneath there. If you was looking for the 1 to 2, you got a complete liquidation in your favor. This is the critical difference between support and resistance and supply and demand. This is how I was able to bank $320,000 worth of prop funding. Again, look for premium versus discount, or better yet, we're going to do it in the order of SKC. So first, you're going to look for structure. What was previously broken? Highs. So broken highs equal buys. Broken lows equal sells. So because we had highs broken, we was looking for more bullish pressure. Wait for price to get back within a discounted area before looking for your entry, which would have positioned you perfectly. So let's move on to another pair. Let's move on to, can we do gold? Let's see. Gold has been trending stupidly heavy. We can use gold. Now, me personally, I'm more of a swing trader. So weekly and daily, those are my macro time frames, right? So you have your macros and your micros. Always eat your macros first, kids. Always eat your macros first. So you're going to start on your higher time frame, whether that be the weekly, but because I can't see nothing, we're going to drop down to the daily. And here we go. We got us some structure. So we got us some, you can either start here or here, but we got lows going into highs, lows to current price. So now obviously we have highs broken in the market. So that's step 1 of SKC, structure. Boom. Now candles. First, let's draw these swing low and, well, the swing high was right there. Right, let me adjust this just a little bit. So boom, you got highs broken there, low, high, structure is done. Next, you're gonna grab your fib from the previous low, the unbroken low to the newly formed high. Now, as you see here, this one barely missed, but if we updated our zone to the most recent swing low like that, look at what happened again. Had you looked for a support and resistance level, let's just say right here. Had you looked to take buys off of this support and resistance level, you would have got stopped out right before price flew. This is where all those smart money or those ICT heads, this is what they mean when they say that your stop loss is their entry. That's it, right? Because all the orders was taken at this touch. And if we did our premium versus discount, oh, look at where we were. In a premium price zone. So now this is the beauty of the 0.68 level, because where it is located, you know it's located in premium or discount. So because you line this up perfectly, all the conditions were met, previous broken high confirming bullish pressure. We have our fib from the low to that newly formed high, that peak high. Price came and pulled back 68% of that move. And the moment all those conditions was filled, either at that tap there, stops under the zone, you've got yourself a complete liquidation of price. Now, this isn't looking for no stop hunt, PD array, none of that. It's just support and resistance in supply and demand fashion. All right, so it's still support and resistance, a variable of support and resistance, just a little, just with a little spin on it, right? So this is how you would have caught this move on gold. Let's do oil, right? This is crude oil. Remember to always eat your macros first. So I'm going to start off here on the daily. I can personally see it on the weekly, but just so y'all can see it, we're going to be here on the daily. Pay attention to price. We got highs, created lows, created highs to create lows to where we currently are in history. Scoot that over just so you can see it. So now looking at this outline, we can see that price is going down, confirming bears. So now SKC. What structure point was broken? Previous lows. What was the unbroken high? There you go. The newly formed peak low, right down there. So now you want to draw your fib from the high to the low. Sorry for the weird cut there. So now you drew your premium versus discount since we are breaking lows. You drew it from the high to that low. So now you have determined where your premium and discount levels are. So now, as you see in this example, support and resistance is in the premium zone. So it has a higher probability of working out. Should you choose, for whatever reason, after watching this video, to still use support and resistance, you now have a better chance at that trade playing out. But because we're using supply and demand, boom, there you go. So we now have our supply level in premium to to look to take sells to the downside. So your setup will look like that. Put your stop outside of the zone because there's still a possibility for price to come all the way up in here. And then you can target your risk to reward ratio, whether that's a 1-to-1, 2, 3, 20, whatever's in your trading plan, right? But if you want to keep things simple, you could just simply target that new structure low. And that would probably be the most optimal exit, just because we know that within this zone, right, this area of balance, that's what it's called in auction market theory, just because price is in between, price is in between here and here. We know that what can happen, at least in this area here. Beyond that, anything can happen, right? So this is all the setup is. So let us transition to some Forex pairs, right? I need to stop saying right. AUD CAD. So now let's speed it up. Like I said, the 0.68 level will always be within premium or discount, so you don't even need to keep drawing the zone to the side no more. All you got to do is just keep drawing SKC. So you got lows broken there, so you know to be looking for sells. So you draw your fib from the structure high to the new structure low. So now all we're doing is waiting for AUD CAD to tap price to then look for sells to the downside. Now, one thing that I like to do sometimes, if I feel that this zone is a little large for me, I'll put a line through the middle of it to determine the halfway mark. And I can adjust my stop loss as such. You could target the peak low right there, swing low, structure low, the BOS, whatever you want to call it, right? The name doesn't matter, just the execution. But that's the setup. Let's move on. Same thing. We got lows broken. There we go. Let's do some CAD pairs. So we had a play right here. Let's drop down to our micros just so you can see it. Price, highs, created lows, highs to where we are now. Obviously looking for sells. Better yet, play was more like here. So this play would have barely missed. That's all good. Go back to our macro levels. Not seeing anything there. Okay, right here is perfect. EUR AUD. The euro versus the Australian dollar. We got lows here, highs there, previous broken structure located right there. And that's the setup. That is all you need right there. So you can enter the trade. 517 pips if you look for the 1-to-2 for 1,000. If you don't want to risk 500 pips, or risking 500 pips may be a little too much for your account, work off of this 50% line within the demand zone, since this is buys, and get you 300 pips. Now again, I am a swing trader, so I am a higher time frame junkie. Next, Euro versus Swiss franc. Check this out. You had highs broken here, but then price came, broke more lows right there. Setup. Next, Euro GBP playing between these lows here, highs right there. Took all of 2 seconds. Euro JPY, while it is playing between this high and this low, that is consolidation. I don't like that, so we're going to move on. Euro NZD. Check it out. Previous broken highs there. Structure, candles, and now we should be looking for a correction back to the top side. Correction, liquidation, push, whatever. Again, the name doesn't matter. Just the execution. So if we would have entered right there, this is how our current position would be looking. Little bit of drawdown, but then we eventually came back to profit. Next one. Euro USD currently is flying. Let's jump out to the weekly. I'm seeing that price previously broke highs there. So once it is done creating a new peak high, so far the peak is right there, we'd be able to look for corrections back into this demand area. And if price keeps pushing, we'll just adjust as it goes. Next is GBP AUD. That was an old setup. Same thing, we got lows, highs, previously broken structure was highs. Draw your fib. Really just pick a low at that point, but we're going to pick the lowest one. We can do right there. And look at what we got. We got us some touches right here. Could have got you a good, basically a 1 to 2 off. GBP CAD. Roughly the same story. We don't even have to drop down. Just look at structure. Lows, highs. Boom. Look at that move. That move, beautiful. That would have been a 0 drawdown entry right there. Like so. Ooh, what happened with you, GC? How many alerts do I have? Let me turn all these off. Let me get rid of that one too. Good. This one is obvious. Strong push to the downside. We already know what's going on there. GJ, same thing. GBP NZD. This one can be a little tricky because we did have highs broken there, but if we look at the structure, the demand level has been broken through. It has failed to hold. Wasn't enough orders to keep hold of it, but then we proceeded to break structure lows because we see we got candle closures underneath. So you can look for that. And I'll do you one even better, because to wait for this play, you might be waiting a month. We're not trying to sit here for a month. So this is where our micros will come into play. So you just drop down into a lower time frame and do the exact same thing. So here we are on the hourly charts. Let's just say, for sake of example, it broke highs. So instead of here, we're more like this, right? You would draw your fib again from that low to that high, and you would get you a demand level, a micro demand level. You could then take this level and just do what you did on the daily, but on the 1 hour. Understand, y'all, the markets are fractal, meaning that each time frame has its own highs and lows you can work with. It's just better, to me personally, to start on the highest time frames possible to get that full zoomed out idea of what's going on. So you can then take continuation trades all the way back up into the zone. This is how you can avoid waiting a month, 2 weeks for setups, right? So you can do that. So let's say this one hits, boom. It has to set up again. What you're gonna do? Draw another fib. Just for it to do what? Tap that, keep going, and going until we finally make it into the macro supply area. So even though on the long term I am bearish, for the short term I can be bullish, doing the exact same thing. GBP USD. Let's see. A beautiful move was missed here. From the lows to the highs. Look at that play. Had stops right underneath. Take it to current price. You would have gotten 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You would have got 10 straight bullish candles from that liquidation run. Zero drawdown. At most, you would have seen maybe 60 pips of drawdown. But if you're a swing trader, that ain't nothing. Scalper, you might be cooked. NZD CAD. Let's see. Let's jump out, eat our macros. So we're playing between this high and that low. Obviously, previous broken structure was lows. And there we go. So this structure here might be good enough for sells, long-term sells. But if you want to confirm it just for extra security, you would drop down to your macros and see if that structure is aligning as well. So I would prefer for these lows here to get broken before looking for any setups. But if you really want to intraday, you can drop down to the 15-minute. I see this low right here broken, boom. And that's what you would look like. So then price would come back. You'd put your stops. Let's just do 25 pips. You could, and then at that point, it's just pick a target as long as it's aligned with your risk to reward. You could take it to the bottom of the macro supply if you wanted to. That still would have banked you 67 pips with a basically a 1 to 3 risk to reward. So again, even though I'm a swing trader, ain't nobody trying to sit here for a month, 2 months waiting on setups. That just defeats the purpose, right? Same thing is obvious. Once you get used to it, It's just intuition and common sense. Lows are broken, you're looking for sells, draw your fib from high to low. That's it. Structure, candle, corrections. It's 3 steps, y'all. 3 steps. Structure, candles, correction. NZDJPY, same thing. Pick a high. At that point, it don't even matter. We like this. We like runs like that. Boom. So let's drop down to our macros. Our micros. Once again, I prefer to see these lows broken before setting up SKC. But once again, if you build like that, hey, hats off to you. On the 15-minute, that's how we would be looking. So then you can take sells if you was a monster and hold it all the way down there. But you obviously ain't gonna do that. We trying to get our money on. So this here could be your take profit 1. For example, here, make sure stops outside. Take profit 1, take profit 2. That's all of them there. Let's go to futures. Then I'm gonna get y'all up out of here. I don't know what's going on there. Micro S&P. Now in my next video, I'm going to be explaining why the markets have been falling the way that they have been falling. And for spoilers ahead, it's not because of the tariffs. The tariffs are involved, don't get me wrong, but it's not because of the tariffs themselves that caused the market to fall. But I'll save that for my next video. That one is going to be more on the fundamental side of things. I'm not going to say too much though. But for now, we're just going to follow structure as it has been presented to us. Sideways. We got this high and this low. Price don't know what it wants to do. So we're going to move on. Micro NASDAQ, same thing. Now, micro US 30. We might have a something here, but peep it. From the low to the high, previous broken structure. Can you do the same? I guess you could do the same on the other two. I guess it don't really matter. But this structure here, the microstructure, is way cleaner than the other two. Right, so as we see, price created lows, which created highs, which liquidated strong to break previous lows, to create new highs, so it didn't completely pull back, to now where we are in current history. So for this move, that push, this is how your supply setup would have looked. But because this is more intraday, we got to update our prices more regularly. So your fib will look like this, which you could then take sells off of to go into macro demand. All right, so let's go to AUD USD futures. Eat our macros. Macaroni and cheese. That was so corny. So far, we had a strong break of lows here, but price recovered all of that, would have invalidated this supply level to continue to the top side. So I'm pretty sure price is going to continue a little bit more before falling. But say if it reversed right now, that's how you would look. GBP USD, broke that down for you already, but same thing. Highs broken. That's how you would look on the macros. Jesus, I'm getting them confused myself. And you just wait. You wait for confirmations of the pullback on the micro levels, aka wait for a freaking low to be broken, dude. If no low is broken, dude, you're not gonna look for no sales, dude. Euro USD futures is ugly, but I mean, we got this weekly opening gap here that price is probably gonna pull back to fill, just because price does not like to leave gaps like that. This is the ultimate form of indecision / volume, but it's still aligned with supply and demand. Wait for that pullback, keep it pushing. Gold, we already went over gold. There's really nothing here. Copper, we might have a something. We got lows broken right here. From the high to the low. There we go. Looking at microstructure, we are currently within this range right here. So there's no setup yet. Don't fall for it. You want to wait for this high to be broken first. So you want to wait for one of these. Gimme? Got me? Good. Silver. Shout out Tori Trades. I know she loves her some silver. Look at that. Right into supply. Meaning we might potentially see some drops in the future. But so far we are consolidating. So the initial entry right here is already gone, but I'm going to wait for these lows down here to be broken to then, let's just say for sake of example, to then take the fib like that and continue on to the downside. And then we did oil already, but once again, this might take a month, whereas this setup right here may happen by Tuesday, maybe Wednesday. Shoot, maybe even late tomorrow, just depending on how strong oil wants to push. Well, that's going to do it for this video, y'all. If you made it to the end, good work. I hope you learned a whole lot from this video. Hopefully you have learned something that you can now apply to your own trading into the future. Now, before I let y'all go, I just want to give y'all some announcements so y'all can prepare yourselves for the future. Birthday vlog. Birthday vlog is coming in May. My birthday is May 4th. I'm going on vacation. I'm going to be vlogging that for y'all. Y'all like my Atlanta vlog. This one, I'm going to actually be hitting the streets. Going to be hitting the beach. It's going to be fun. But then, later on in the year, around June or July, I will be going into the military. Why? Because my wife is pregnant. Wonderful times. It's a wonderful thing for me just because my child is already a millionaire before they even get here. So All glory be to God for my life accomplishments. Glory to Him for giving me this skill set to be able to pass down something to my children and to their children. So later on in the year, I'll be heading into the military. And then if y'all already were in the military, you know, basic training is 2 months. So if I vanish for 2 months, that is exactly why. Of course, I will let y'all know when I will be heading out when I get my date. But what comes with that is a brand new location. So at that brand new location, when I finally get stationed somewhere and I'm there for a good little bit, I'm gonna be rebuilding my office. It's going to be lit. I'm gonna have a whole lot more stuff. I'm gonna have better cameras. I'm gonna have mics. It's just gonna be an amazing thing. So why am I going into the military when I can pay for everything out of pocket? I'm a cheap bastard. That's why. I would much rather you pay for it before I pay for it. So if the military is gonna give my wife the care she needs for the free ski, and all I gotta do is just be strong man, I'll do it. I'll do it. So that's gonna be it for now. Thank y'all for watching the end of the video, and until next time, peace.